Hello and welcome to Crypto Weeklies. In this video, we analyze Ethereum and ETH. None of the content is financial advice. This is the homepage of the website. This holds all of the charts. It's available for free. No sign-ups or anything required. Right now, this banner again, it's all machine learning and risk-based models on this website and quant models. Made easy to understand. Again, not financial advice. Per our aggregate models, ETH's base case forecast for 2025 is at around, roughly speaking, 6,000, whereas bull case is at roughly speaking 10,000. We'll dive deeper how this is calculated and what it means for ETH. Right now, the price of ETH is above $4,000 again. After testing those 20-week simple moving average, going slightly below it at a week level, but again closing above the 20-week has helped ETH to again garner some positive momentum and rally to that 0.786 like we mentioned in our previous videos. You can check out all of the videos of this YouTube channel straight from over here. Opens up this YouTube homepage, and then again over here, if you click or enter ETH over here, you could see all of the ETH related videos. They are not sorted by time, but again that's on YouTube. So coming back to ETH's positive seasonality, if the price is held above that $4,039 level again, which is about $20 lower than the current price, that could bode well for ETH as it stays above the 0.786 on the fib level drawn from the 2021 high to the 2022 low. Whenever the price is above this ascending green line, that has helped ETH to propel to newer highs. This ascending green line support for this week is coming close to at around $3,660. Coming to the machine learning based price forecast and analysis using as extrapolation using seasonal ARMA, where the price is trained on ETH's the ML model is trained on ETH's price since November 2017. So good 8 years of data at a weekly average helps identify what is the 6 months outlook for ETH, again, out of which about 3 to 4 months are of key area of interest. If the price action stays in a non-euphoria bull run peak fashion, the price forecasted or extrapolated by the machine learning model, the ceiling is for this week is at around $4,188, but closer to that December and early January, the price in a non-euphoria bull run peak at a weekly average level could go as high as about $5,300. And with this comes a caveat that these are weekly averages. So if the price at a weekly average goes at around $5,300, it has a 10 to 20% tolerance. And for example, one good example over here in August 2025, the weekly average for that week when ETH went to 5K was $4,495, so almost $4,500, whereas the price at the highs went to close to 5K level. So adding that 10% tolerance over here would add about $530 to that to this price forecast. That gets price to that non-euphoria bull run target for ETH, as mentioned by the banner, at around $5,800 or $900. The euphoria target for ETH for this machine learning model is at around $6,500 towards the end of the year. If we rally slightly into first week of January of 2026, that target goes to about $6,700. So adding a 10% tolerance that on this weekly average, the price at the peak per this model, it could be at around $7,500. So it would take about a 3 standard deviation, around 99.7 percentile bullish move for ETH to get to that coveted target of about 10K. That too again withstanding a lot of rally from here to now till about middle of here to about middle of January 2026. And again with that tolerance of about 10-20% from that $8,500 target, with the 10% increment gets close to that about 9,250 or 350. So that's the machine learning side of things. The regression based scenario, this is a linear, so the first one is a polynomial regression based model where the fair value for ETH is at around $5,700, close to that non-euphoria bull run target. If we overshoot that, and as like we did back in 2024 three times, and go to this yellow line, that ceiling for ETH is at around $9,200. um, and again, 5-6% higher than that could get ETH to that 10k coveted target. And that's the polynomial regression model. The linear regression model is again price color coded at a linear regression based fair value. Currently the price is very close to the fair value, which is at around $4,175, whereas the peak regression model, which deals with what happened to each price from one market cycle to the other towards the end of the bull run, that ceiling is at around $13,000. But you can see the delta between the price action and the dotted red line is ever so decreasing. So this time around, again, there is a high likelihood that ETH misses this dotted red line. If we go by that logic, and if we say that whenever the price hits an intermediate risk level between 0.6 and 0.7, the rally could be over. That gets the price action close to $9,400, and between $9,400 and $10,900. Historically speaking, the price ceiling for ETH for this bull run, the risk went as high as about 0.78, and then in August 2025 at 0.66. So slight decline in that close to 0.6, the price could be somewhere close to $9,400. The time weighted average price model says that risks are not too highly elevated like they were back in 2021 or even 2024 and August 2025 for that matter. The time weighted average price for ETH is at around $1,650. This line helped identify a great accumulation zone for ETH back in 2022 twice and again in 2025. The time weighted average price, whenever the price is close to this blue line, again, this is not a retroactively fitted model, this is a live model, interacts with the current price and the time weighted average price for ETH. This blue line could potentially come really handy late 2026 if the asset class is in bear market in mid to late 2026, accumulating below the blue line as it did in 2020 as well as 2019, 2020 as well as 2022. This blue line could mark or usher a great accumulation phase if historical evidence is of any use. In terms of the 20-week simple moving average price model, again, a confluence across several models when the risk levels over here in 2025 were low, in SMA model as well as in the TWAP or time weighted average price model, that confluence helped identify those undervaluation zones. Right now, the time weighted average price risk is at around 0.43. If it went to the intermediate level between 0.6 and 0.8, the price in that scenario for ETH could be closer to that non-euphoria bull run peak between $5,170 and about $5,700. So all in all, again, major area of confluence at around $5,800 with a $100 tolerance, and also $9,400 with a couple of $100 tolerance in a euphoria fashion scenario. All in all, an estimated bull run peak as it stands with respect to all of these individual risk-based models, again, not the machine learning models or technical models. The base case scenario for ETH is at around 5,900 as mentioned. The bull case is around 9,900, and if everything lines up perfectly, the stretch target or the moon boy target for ETH is per this optimistic model is around slightly under $15,000. With that, I would like to conclude. Hope you enjoyed the content. If you did, please give a like and subscribe, and also check out all of these charts on cryptoweeklies.com. Thank you and have a nice day. Bye-bye.